We are joined right now by real estate developer, New York City local, Matthew Blesso. He is president and founder of Blesso Properties. Matt, so glad to have you in the studio with us. You and I spoke on the phone. You said anyone who doesn't think that commercial real estate is in crisis is kidding himself.
That's correct. You really have this cloud overhanging in the form of the assets that banks have on the building in their balance sheets. And just as we had, this huge residential fallout, the shoe, in my opinion, really hasn't dropped yet for commercial loans.
You said everybody's in this feeling of sort of extend and pretend. Describe a little bit about what that means.
Well, I think a lot of lenders just don't want to accept that they have problematic assets. So, loans are coming due, and there's no way of refinancing them. So banks have choices. They can either foreclose, they can take the property back, or they can give a loan extension. And what they're generally doing is giving loan extensions, and they're really hoping that if they push off the problem a little longer, it'll go long enough that the overall economy has improved and that these properties can be back above water. But in many cases, the balance of these loans are higher than the values of the properties.
So let's talk about some of the properties that you had. I mean, you've had a lot of success in recent years, and even through this sort of rocky period, you guys have weathered the storm pretty well. How are you doing it?
We have. We're in a fortunate position that we don't have any problem assets that we're working on, and it still feels like a challenge in this market just because there's a lack of opportunities out there. We have a company, and we want to stay in business, but when there's not a lot of things to buy, we've really had to reinvent ourselves.
Now, you had a development on Mulberry Street, right? And you had 2 townhouses that you say gave you great returns. Your worst deal so far this year has been breaking even. Is that right?
That's correct.
Okay. So what about the local color then? You sort of have properties downtown, you have properties in Harlem, you have a few midtown. I mean, what looks the healthiest to you right now?
Well, overall, the residential market in Manhattan, the good news is that there is a market. At the end of last year and the first half of this year, there basically was very little transactions occurring, and everybody, just as everybody was sort of feeling left out of not buying in 2006 and 2007, people were feeling foolish if they were buying in the middle of a crisis, and that has sort of changed. People have come and they've dipped their toe back in the water, and so we have a new market that's established that people can get a little bit more comfortable with. And it's probably at about 20% off on average of where it was in the peak of the boom.
Where's the most pain right now?
I would say there are select submarkets which still have further depression to go. I would say Williamsburg, Harlem. Because
Williamsburg was crazy. People were just throwing money there, right? Because that was the young, hip kids that were just tons of galleries, tons of restaurants.
It suffers from, I think, kind of 2 main problems. One is just a huge oversupply. There was this idea that everybody loved Williamsburg and everybody, there's so much creative energy there, and that's where everybody wanted to live. But I think, some developers maybe didn't recognize that the interesting people walking down the street of Bedford Avenue are not $1 million luxury condo buyers.
All right, Matt, we do have to leave it there. I know you said Harlem, Long Island City, and the financial district as well, weak spots to watch for more commercial real estate distress. We thank you very much. That is Matt Blesso. He's the founder and president of Blesso Properties.